Hey everyone, this is the Halifax Real Estate Podcast. My name is Jason Paul and I'm a licensed realtor at Keller Williams Select Realty in Halifax, Nova Scotia. I'm here to help you gain a better understanding of real estate in Halifax and introduce you to a wide variety of people that work in or with our industry as well. Tyler Sellars is a professional real estate investor who specializes in the buy and hold investment strategy. Tyler purchased his first investment property in October 2018 and within the last 2 years has expanded his portfolio to 8 investment properties with 60 tenants. Please welcome Tyler Sellars. Hey Tyler, how are you?
Very good, Jason. Nice to hear from you. Nice to see you. Thank you very much for having me.
Man, thank you so much for coming on. I thought when I thought of this topic for the podcast, I immediately thought of you because you're probably, I've known you long enough. I've seen you go from 0 properties to what, 8 now?
Yeah, we're at 8.
Congratulations.
Thank you very much, sir.
And I just thought, in terms of just understanding investment properties, you're one of the first people that I met that was really engaged with the topic and that was really motivated to pursue investment properties as a way for cash flow, passive income, and building wealth. And I thought, after witnessing your story over the last couple of years, man, you're the best guest to have on to just give an introduction to investment properties.
Well, I certainly wouldn't think that I'm the best guest. There's a lot of people out here that are doing incredibly well and much further along than me. But for someone my age, I think that I certainly wouldn't think again that I am even the best in my age, because there's a lot of people that are younger than me or around my age or around our ages that are much further ahead as well. But something that I'm very proud about and how I grew is I didn't have anything. So I never was handed anything. Like, I was declined, I think 27 times just in the last 2 years for mortgages, right? So like I've literally been declined more times than I've been accepted or approved. I'm at 8 properties, so I was approved 8 times, right? So I mean, like 8 out of 27 ain't great. But I still got there and I was still able to do it with the salary that I was making, with the amount of money that I was trying to save, and with no cosigns, nothing like that. Like, my parents' mom went bankrupt 2 years ago.
I'm sorry.
Oh yeah, man. It's like part of life, right?
My mom went bankrupt actually 5 years ago.
No shit.
Yeah.
Yeah. So I mean, like, hey, it is, it's a very big motivator for me. And my dad, he's been bankrupt for like 10 years and just constantly mauling through life to try to figure it out.
Yeah.
And can I swear on this? Like, what?
Yeah, of course. Go ahead.
So like F, right? Like, fuck. The motivation that goes through that is pretty heavy. And they're in their later ages. So my dad's like 70.
It's scary.
And my mom's in her late 60s. So, I mean, we're not talking, truthfully, like, they do not have another lifetime to be able to figure their stuff out before they retire. They're in their retirement age and they still don't have that. So at 26, like me right now, I had some obligations to hit before I could really relax. And I had a cousin once ask me, like, why are you so motivated to be, quote unquote rich? And it wasn't so that I was like rich. It was really freedom. Like, I was very motivated by freedom. And money just allows for that freedom. I mean, I could always be self-employed, but the thing about just being self-employed is, yeah, you're free, but then you're not making any money, like, unless you're doing well in self-employment, right? And so I didn't want to just be self-employed free. I wanted to be self-employed and making lots of money so that I could be completely free.
Yeah, so that you can go where you want, when you want, and move how you want. And if you have a project that excites you, you can pursue it because you have the time and the leverage through business and wealth that you can actually pursue what you want to do.
That's right. And also help my parents
when
I need to, right? So that's a very big motivator for me, is my parents. And then, of course, when I started my career coming out of university, you have my degree like literally behind your back right now, hanging up in a portrait thing. I framed that last week for my parents. Like, they really wanted that out of me. So I finished that. The thing that degree brings me was to become a manager of a bank. So a Scotiabank, RBC, TD, whatever. They really were building you to become managers of branches or banks or just tellers, and you build up
To work in the
ranks,
system.
to work in the system. And I have a lot of friends that do it and they love it, so like shout out to them for pursuing that when it makes sense to them. But it just made no fucking sense to me to make like $1,200 a paycheck, or like max $2,000 or whatever it is a paycheck, right? And they decide when you work, they decide like how well you work, they decide what you're working on.
Yep.
They decide when your growth is. There's all these ceilings that I really didn't feel comfortable with, and I went to work every day unhappy. So it made no sense to me, even at a younger age. Why would I do this for the foreseeable future? And real estate really was that first tick for me to be like, oh, this is something that I could do. Because I constantly tried to do businesses, like started a coffee brand, started selling soccer shoes in high school, started selling beats, like all these kind of crazy things. And it worked out a little bit here and there, a couple hundred here, 1,000 here, whatever. But it wasn't a career. And the first thing that ever really did work out was real estate, and it boomed.
That whole story is incredible. I'll let you know that you don't know this about me, but I relate to that on such a personal level because not a lot of people know this, but when I was growing up, my dad didn't really bring in a lot of money, and my mom, to make ends meet, had to work 2 full-time jobs. So when I was growing up all my childhood, my mom worked 96 hours a week. That means she clocked in on Monday morning at 12 a.m. She clocked out at 11:59 p.m. Thursday. And the other 3 days were used for sleeping, eating,
of course,
bills, cleaning, functioning. So when you talk about motivation from your parents, that really does hit home for me. And I couldn't agree more that real estate was the first thing for me that I was like, oh, there's an opportunity here. Yeah. You can really build something.
Something that I listened to today, which I thought would go really well with this podcast and this episode, was you can back in the 1800s when the Constitution came out in the United States, or late 1700s to 1800s. So they said, every man was born equal, but then they added the Constitution on top of that to say we the people, but they really just had different divisions of who was allowed to vote. Yeah, and one of the divisions was you had to be a white man, but you also had to have property. So it wasn't every white man that could vote. It was white men in particular, with land and property. And it really hasn't changed much. Obviously we've had, in the States, they've had a black president. So things have changed. Like people can vote, minorities can vote now. And they don't have to be homeowners to be able to do that. But something that is still true is the most powerful and wealthiest people own real estate. Yep. And it is a huge common denominator in wealthy individuals that real estate is a wealth builder.
Yes, I couldn't agree more. So I guess now diving deep into the topic of investment properties, what to you is an investment property?
Anything that provides income.
Okay. So when you bought your first property, what were you looking for in an investment property?
Cash flow.
Okay. When it comes to cash flow, what do you mean by cash flow?
So everyone's different.
Yep.
Halifax is where we're at right now, where you're a realtor.
Yep.
It's where you sell and buy. So I don't typically buy here. I mean, we're sitting in my home, so obviously I have bought something, but I'm not fully invested here in Halifax market. I am invested in the Moncton, New Brunswick market. Yeah. That's where I'm from. That's something that I know really well, and it's a lot cheaper. The cash flow is higher. I
was going to say, Halifax is hard to find cash flow at the moment because our price points have gotten so aggressive with the market that we're in right now.
Yeah, so the market that you guys would have to do here, or the business plan that you guys would have to do here to make any money in real estate would be the BRRRR method as a real estate investing perspective. So that's buy, renovate, rent, refinance, repeat. You're able to do that quite well because you can get your money out and more than just the money that you put in, and then repeat it again, and you can continuously buy and rent properties. Yeah. But those rentals aren't sustaining the property, especially after a refinance. Yeah. So it's almost losing money. You're making cash on today, but tomorrow you're losing. And so a lot of people will end up selling the properties once they refinance because they can't keep those properties, or they're just staying afloat. And a lot of the properties are on their salaries, their personal salaries, to hold them up.
Yeah.
And I just don't believe in that very well. Like, the way that I've grown is all through cash flow and all through equity.
Yep.
And the equity, I've never refinanced on a property. So
You get to refinance.
I've never refinanced yet.
And you've acquired 8 homes.
8 properties. So like we're looking at 60 tenants right now is how many I have in my portfolio.
Okay.
And I've never refinanced, and I've only purchased. I've never sold. So that being said, I really only started 2 years ago. To this month.
And the growth is incredible to watch you go from. I remember your first purchase to now, and the home that we're actually sitting in. I was here when I first showed you the unit.
Yeah,
and
for sure.
The renovations you've done are incredible. As we're talking right now, he's got a third unit being currently completed, right?
Yes.
Convert the garage into like a sit-in theater.
Yeah.
And you have the upstairs currently rented for how much?
$1,000. It's
$1,000 a
cheap.
month.
Yeah.
Yeah. So like what you done with this property in terms of cash flow is incredible alone.
Sure.
Now, I'm going to go back to cash flow because this is a really important thing. A lot of people don't understand with investment properties. They think we can just buy the property and then we'll sit on for 5 years, pay the equity down, and we're financing our money out. But the truth is, cash flow is king.
Yes.
So when you're looking at cash flow, are you looking for cash flow neutral or are you looking for cash flow positive?
No,
properties?
cash flow positive every fucking time. Yeah. We're not talking about, so like the only way that I can get paid is if it's cash flow positive, because my whole livelihood is on real estate.
Yes.
I don't have any other sources of income. So the cash flow really is the most important thing. And someone explained to me once upon a time, they were like, have you diversified? And I was thinking like, oh yeah, everyone says in investments, like you need to diversify your portfolio. And a great quote that I remember very well was that I am diversified, but I'm diversified. I only get money from cash flow of properties and real estate. So that's my whole portfolio.
Yep.
But I'm diversified through 8 properties.
Yes.
So like one can go to shit for a huge renovation project, or I need to, get out some money from insurance or something like that. And I won't be able to get some money for a little while on that one property.
Yeah.
But all other 7s will be fine.
Of course.
So it's, constant work, but also constant like money is coming in every month. Cash flow for me, let me give you some numbers. So like,
yes, please.
I need to make $1,000 a month in cash flow from a duplex. That's how I explain it to people, is like,
is that before or after expenses?
Cash flow.
Okay.
So cash flow is your income minus all of your expenses. That's mortgages, Wi-Fi,
your net,
everything, right? Like we're going from your mortgage, which is your obvious, right down to your nitty gritty, which is like a Wi-Fi signal, right? Like I'm paying everything on some of these duplexes that I have.
Yep.
And, but yeah, they have to make $1,000 a month in cash flow. I have a triplex and a fourplex that are the same idea. Like I need to be making at least 1,000. Now, obviously, like some of them make more than that. I have a 12 unit and a 16 unit that obviously is going to be making more than $1,000 a month.
Hopefully.
Yeah, for real.
That many units.
Yeah, exactly. So, I mean, like, listen, once you get to that level, like I'm experiencing it right now, this is still pretty new of buying that 28 unit portfolio.
Yeah.
When I bought that, it moves you to the next stage, which is like professional real estate investor. Whereas before I was kind of doing it like at the whip.
Yeah.
It was very passionate. But now it's like, I'm in the professional leagues and I'm starting to buy like bigger buildings. And it's at 26, it's like very exciting, but I also have to be quite smart with it and how I
move. Mm-hmm. Now, first off, congratulations.
Thank you.
That's incredible.
Thanks. It's cool because you saw it, like
that, and that's the really intriguing thing.
I mean, we're on a podcast right now, and I'm saying this, so it's kind of weird, but it's cool to like tell you because you are always very supportive, and you're not a jealous type.
God no, I love what you're doing. I think I showed you were my first. I showed you my first ever home.
Yeah,
when I got my license,
the one right down the road.
Yeah, you were my first. You were the first person to ever call me and say, "Show me this building." It was on Brunswick Street.
Oh yeah,
yeah, the condo, the loft unit.
Yep,
yeah,
that was beautiful.
So like to see how much you've grown in the last 3 years has been just
That place was so gorgeous, man. I still wish I bought that sometimes. Even turn it into an Airbnb, which would
Have you seen the renovated ones?
The what?
The renovated ones.
Oh yeah,
Yeah, they're spectacular. What
gorgeous.
people have done.
But that was my plan, was to renovate it myself. And
Yeah.
then, but anyway, it didn't work out. And
I gotta go back on top of it though, because this is a really key detail. Usually, in my research for investment properties, people usually cap out at 3 or 4 properties with the bank before they have to go through private lending or private investors. Now let me get this straight. You said at the beginning, I want to make sure this is correct. You've gotten 8 mortgages out of your bank, or have you been going private lenders?
I've never gone private.
So all your financing has been through banks, and you got to 8 properties.
Yes. So let me clarify. I have 5 out of 8. 5 out of 8 out of my own name.
Wow.
So the rest are in other people's names, like partners or
JVs,
stuff like that. Yeah.
Joint ventures. Sorry.
So yeah, I mean, we're talking 5 was my hit. And it wouldn't have been my max if I had a salary, but because I left my salary job about a year or 2 ago, banks, like traditional lenders, will not approve you unless you have a 52-week work week or something like that, right? So and money coming in constantly. So we're talking, that I've always gone with traditional lenders. And I've never had to go private yet, which is something that's
incredible.
Very different than what most people are sharing online.
Yeah,
in
I usually hear a cap out at like 3 or 4, but to hear you do 8 with a bank is just incredible for leverage.
Oh man, like that's a thing. So everyone talks about CMHC.
Yeah.
CMHC is, you can put 5% down on a duplex, 10% down on anything larger. Now. And CMHC also does, by the way, like 28 units. We didn't do it on ours, but CMHC was offering.
Amazing.
CMHC does, large ones, but everyone talks about CMHC. You have Genworth and you have Canada Guarantee as well.
Always.
And I'd ask the lender that you're going to work with, which one are they using? Because typically they'll just say CMHC, but they're actually working with Genworth. It's just most people don't know what Genworth is. Yeah. So, just because they're saying that CMHC is their option or what they're doing or what they're working on doesn't mean that Genworth isn't a possibility.
Yeah.
So Genworth is a great platform for real estate investors. Genworth and Canada Guarantee. One reason why they're a great platform is because CMHC has caps. So you're only allowed to have 1 CMHC property under your name at any given time. So you can't have 2 CMHC properties.
I didn't know that.
Genworth, you can have up to 8. Yeah.
Wow.
Yeah.
I had no idea.
Yes.
You were the first person I've heard ever mention that.
So I believe the number is 8. You can check that out. But the number to me so far, I believe, has been 8. And so I could technically buy 8 properties under Genworth at 5 to 10%. And so, we're talking huge numbers there. The cap saying that people need to go to private lending after 3 is quite significantly bullshit, because we're talking unless they have huge amounts of credit card debt, car loans, line of credit debt, then of course, then their total debt ratio isn't going to go well for a private lender, and the private lender is always going to decline them. But if you don't have those kind of debts in your name, you can go quite high. And for me, I never had a car. I still don't have a car. Haley, my partner, is the one that owns the car.
Okay. But that's another key trick to investment properties and getting financing through a bank and or a
pay your car.
Is pay your car, but also keeping that debt ratio low.
Huge, yeah. So no credit card debts.
Yeah.
No line of credit debts. And no
car payments.
No car payments.
No loans of any outstanding interest.
No, so that was another thing that I was very lucky for, is I did get a good scholarship, and my dad helped me out a lot with university.
Okay.
So I didn't come out of university with a huge loan.
Yeah.
And so my total debt ratio was whatever the opposite of whatever. Is it 0? I don't know. I didn't have any debt.
You had a lot of leverage.
Yeah. Or I had no leverage because I didn't own anything, but I think I had opportunity. They gave me opportunities to take on debt, because they're well, this kid, when he gets debt, he doesn't use it.
Yeah. Yeah. Okay. That's a better way of putting it.
So yeah.
Now that's a wonderful point. But going back to the listener, because this is a great point. Is that you mentioned your past career? What if you can be so bold, if you don't have to answer this if you don't want to, but how much were you making at your career before you got into real estate investing?
60,000.
And for that was the calendar year.
Yeah. So I mean, that's actually not true. I was making 40,000 at a salary job.
Yep.
And in October 2018, I switched my jobs.
Okay.
My job from 40,000 to a new job offer for 60,000 at a new company.
Okay.
So the day that I moved over to that job, I was closing on
your first
house. And I used the salary that I was getting from the first job to buy that house. And then I was making 60 on closing, right? Because the new job started on the same day.
Yeah.
Once that went through, I was making money on the other property, like the first property as well. So I was making 60,000 on my salary, but then I was also making, I think the first few months until I was legally allowed to increase the rents after 3 months was, I was making like $300-400 extra. So whatever that is monthly is how much I was making. And then once I increased the rents after 3 months notice, I was making real money again in the real estate market.
Yeah.
As well as my salary job. And to go back to my original point, like something that I would do differently is I would have kept my job longer if I could, because I was working in the startup world. Like I just couldn't keep a job. They kept on folding as a company, or they just didn't have enough money to pay for a marketing manager. And it's not a focus of a company that's failing to market a platform that's not even built, right?
Yeah.
So like, obviously my job was pretty obsolete right from the start, and I was let go after a year or less. And that's when I finally decided, like, I can't just keep on waiting for people to see my worth and to hold on to me for that long. Like, I really need to build something for myself so that if there were anything else, at least I'd be able to show my value.
Yeah.
And saying like, hey, I've built something pretty significant. I'm worth X amount.
I love the mindset. That's incredible. I want to go to your first investment property, because I know a lot of my listeners right now are our age. Mm-hmm. And I get this question all the time from fellow friends or people I meet, and they always bring up investment properties. Yeah. And we'll go for a coffee, and whenever I have a conversation about investment properties with someone, I try and overwhelm them, and I try to honestly give them more information than they can handle, because I want to know how motivated they are. Mm-hmm. Because usually when you it's usually down to, like, are you doing BRRRR, flip, buy and hold, what market you're looking to invest in, and I'll find out within 30 minutes if they're a serious investor or not. And so far, no one. You're the only serious investor I know personally. So that first home that you bought, how did you start that process, and what was your mindset going into that?
Well, let me first preface it, because I'll get back to the question, but to your original point of, like, I'm the only serious one that you've met, it's not, so I started pretty young.
Yep.
So there's that, but then there's also the point, like, I educated myself, and I was always very entrepreneurial, whereas there's a lot of people that are risk adverse that are still going to be great real estate investors. The name that I mentioned that partnered with me prior to us recording, he was a fantastic entrepreneur mindset, but he was very risk adverse. So he took, like, a very corporate or, like, traditional job to make sure that he could get a salaried income coming in every month. But the thing with that is, like, he wanted to make sure that he was making X amount every single paycheck, right? Okay. And he wouldn't have bought a property if it weren't for me saying, like, hey, listen, this is how we're going to do it. You can use my knowledge and my ability, like what I know, and we can leverage on the fact that I already have all these connections in the industry that will help you in building your portfolio. And that's the only reason why you invested in. I think that that's a great place for a lot of people to start, is to partner with someone.
Joint venture.
100%.
Yeah.
But someone that's already been doing it.
Yeah.
Because a lot of us who are self-employed can't get mortgages. Like,
Preach.
we can't get mortgages, and we can't get approved on anything. So Like, for example, I was trying to buy a car and I can't get a car loan. I had to pay cash for the car because that's just how it is. Like,
Yep.
I just can't even get approved for a freaking car loan.
Even with, even with a portfolio of 8 different homes.
It doesn't matter.
60 tenants, right? That was the number?
Yeah. It doesn't matter. So how I started was I went diving into real estate podcasts.
Yeah.
There's a plethora of amazing ones out there in the market. And really what I would do is I'd take the dogs for a walk, or I'd go biking, or every morning actually I had to bike to work, and I'd just listen to those podcasts. And it really taught me pretty quick, like, a lot of the mindsets that they have, but also a lot of like how to justify purchasing a property versus letting it go. A lot of the decisions that you kind of have to make and those kind of things. So it was very cool to hear from people that are doing real well.
Yeah.
Of how they're doing it, and they give so much free information. So that's how I got started with the mindset. Really like, oh, this is something that I'd be interested in. You know, I was clearly, obviously, already interested in it if I was looking up these podcasts. But similar to your listeners, like, they're interested enough to listen to this. I hope that, you know, they might reach out and just say like, hey, can we go for coffee? Because I'd be more than happy to share some podcasts and people that they should meet to be able to make sure that they can get to the next steps.
When we're done with this, you can let me know what podcast you listen to, and I'll make sure they're in their show notes for people.
I'll have to get my cell phone, yeah.
Yeah. Actually, speaking of real estate investment podcast, we'll go back to the actual properties in a second, but that's how this whole thing started. Was I was listening to the Breakthrough Real Estate Investment podcast out of Hamilton by Sandy McKay and Rob Brake.
Yeah.
And they inspired me to start this.
Good.
And that was how I even got into the podcasting world, because I learned so much about investment properties in Canada from those two guys and what they were doing in Barrie, Hamilton, Petersborough, GTA area. And I was like, okay, well, if they're doing that, I can do this.
Yeah.
Now, back onto the first property. So you got your mindset right. And how did you start getting into finding the property that you were looking for that would be the right one for you?
Price, for sure.
Cash flow.
Yeah. Price for sure. So I knew, like, how does one make a lot of money in real estate? They have to have a lot of tenants, and they have to have low expenses. So I knew that price was going to keep the expenses low, choosing the right price, and then how many bedrooms was going to depict on how much income I was going to build.
Yeah.
Right. So my first property was a 7-bedroom duplex, and it's in a university town or a university area.
Yeah.
So, you know, the duplex was rented 3-bedroom up, 4-bedroom, or 4-bedroom up, 3-bedroom down.
Okay.
And it, you know, makes X amount of money per month. I knew those numbers because all you have to do is go to Facebook Marketplace or Kijiji to find how much rent's going for. And yeah, I kind of did quick numbers, said, oh, that could be a great property. You look at the interior then and you say, okay, there's a lot of work here. There's a little bit of work there. There's no work needed here. And you just get a generalized idea of how much you think that would cost. You know, something that I had in my back pocket was I knew a little bit about construction.
Yeah.
So if you don't know anything about construction, then you would reach out to the realtor and say, like, how much do you think this would take in renovation costs to be able to update? And you have to choose your update levels. So if it's a B market, which means that it's not a high income market, but it's more so like a university area, like the south end of Halifax is a B market, or even C markets in some places. Like North End back in the day used to be a C market.
Yes.
And now it's really like a B and A market.
Yeah.
And so, yeah, we're kind of diving into that a little bit, but realistically, like, finding your first property is all about the numbers. So just focus only on the numbers. It doesn't matter if it has like shitty baseboards or crappy doors or the lights are gross. Ew, the paint's disgusting. Like, no one cares because you're going to update that anyway.
Yes.
Just make sure that that's in your numbers.
Now, your numbers, how accurate were they? Were they pretty spot on, or did you guess, like, did you make any mistakes in that first assessment of stuff?
Things always change, but the easiest way to figure out your numbers really close is income and expense sheets from your realtor. So if you're working with a realtor, you just ask that realtor to provide you with income and expense sheets of the properties that you're interested in, and they'll provide you with essentially like a pro forma of like what that property's been doing over the last year. And so you can say, oh, insurance was this much, natural gas was this much, or oil was this much, electricity was this much. Here's how much the rents are right now, and this is how much it's producing.
Okay.
Something that a lot of people miss, I don't know. Yeah. A lot of people miss to put the mortgage in there.
That's a big expense.
Yeah, but I mean, yeah, exactly. Yeah. So like they'll provide you with the income and expense sheet, which is essentially just the incomes and expenses, but they don't know how much your mortgage is going to be because it all depends on what you're paying for it, what your interest rates are, and who your provider is. So, and what the plan is of that mortgage. So, and if you're adding your taxes in there, like what are your taxes? Don't know. Like in New Brunswick, it can be double taxed if you don't live there. So, they typically won't put that in there either sometimes. And so you need to be able to recognize that like that's something that you should add, and that's something that you need to know to do that. So just make sure that all of your expenses are there before making any rash decisions. But I do remember like losing sleep for sure, knowing that, oh shoot, my numbers probably aren't going to be accurate. Or what if my numbers aren't accurate? Then what? Like, what if they're real bad? There's no way that you can make this amount of money off this little property.
Yeah.
Right? And then it does. And then you're like, oh, well, frig, I should do this like 10 times over. And that's how the bug.
It gives you the confidence to go on pursue
For
the next
sure.
one.
That's the bug.
Now, when we talked about Burr briefly, Burr is my personal favorite investment strategy. I always tell everyone that they should do Burr because I find flipping a risk, and I like buy and hold as well. Anything that holds the property and allows you to refinance. I always get the question of refinancing. A lot of people don't understand what that is. They understand the buying, the renovating, the renting until you get to the second last R, which is the refinance process. Mm-hmm. What is that for people that might not know? How do you refinance a property? What does that mean?
So ideally speaking, if you knew that you were doing a Burr, which is something that I've never done, so I'm not an expert in this, but if you were doing a Burr, ideally speaking, you would have bought the property with a variable interest rate so that you could get out of that 5-year term early. And you would simply tell the bank that you chose to be your lender that you are looking to Burr within the next X amount of months. 6 to 12 or less. They would then provide you with a plan on a mortgage that makes most sense financially to you, and you would look over that and decide who you're going to go with. So BMO would provide you with a plan, RBC would provide you with a plan, Scotia would provide you with a plan, assuming that you got approved from all three. Then next step you would do is get it appraised. I suggest that you always get it appraised yourself. So you pay the $1,200 that it costs to appraise the property. It costs you $300 if you go through the bank, in which, by the way, you can get reimbursed once it's done. You just need to ask. But if you don't ask, they'll never give you back the $300. Now, let's say you paid for it yourself. You can tell them, you can give them the right pictures, you can give them access to the property at the right times, you can, sway them, sell them, walk them through, say, this is how much work I did on this is what this is made out of, all those kind of things. When you choose to be the client of the appraiser. When you're not the client of the appraiser and the client is the bank, it's in the bank's best interest to for the appraiser to work with the bank.
Yeah, within the bank's numbers, what they're looking for.
That's right. So they're going to say, oh, this property's worth $400, but I mean, it has this wrong with it, or has this wrong with it, or this I didn't get to see, or this I don't really know too much about. So let's say it's worth $365.
Yeah.
The bank's like, that's a great deal. Perfect. Let's go. $35,000 in profit probably right there. And again, it's speculation, but it's pretty safe. Now, in refinancing, all you do is you work with the bank that you chose to be your mortgage provider. You provide them with that assessment that you got, or the inspection, like that property value assessment that you paid for, and you provide them that, and then they'll give you a refinance amount. So they'll say, okay, well, we can do up to 80% of the refinance value, or of the assessment value. And if you're making cash flow on that, or if you're making, money, not cash flow, but if you're making a profit off of that, then great.
Yeah, exactly.
That's how that works. Yeah.
I want to get back to, obviously we just deviated from your story, but I want to get back to your story because you mentioned that you have 8 properties and you have not refinanced on any. Is there a reason why? Because you before we got into this, you mentioned your numbers on the home that we're sitting in now, which are fantastic. So why not refinance on this particular home and get your cash flow out?
You need to have to get approved.
Yes.
Right. So it's like applying for a new mortgage again.
Yep.
And I just can't get approved for like anything right now.
Okay.
Because I have all these properties.
Yep.
And with rental income, they'll only take, like, dependent on the bank, of course, but typically they'll only take between 50% or 80% of the rental value, like the income that's coming in through the property. But of course, they'll take 100% of the expenses. So the numbers never work out. Now, I might be doing something completely different, and another investor in the city that's listening to this, or someone that's done it, might have a different thing. This is all new to me of refinancing.
Yeah.
But I've never refinanced one because I've never really needed to, and I've never been interested in paying more on mortgages because I really cared about my cash flow. So if my cash flow was making, like I said, let's say $1,000 a month on a property, but if I refinance, it's now going to make 600 or 550, 500. Now it's gone down by half. What if something bad happens to the property? Sure, I got out, let's say $30,000 to $60,000 in the equity that I built in the property. And now I have that in my bank account, but assuming you would use that on something, you would use that money that you got to buy another property. And it's a fantastic plan for a lot of people that are looking to grow fast, but I've been able to do it without it. And I think that that's the way to go if you can get away with it, or if you can do it that way, because, I like the amount of mortgages that I owe is something like 3.7 or something like that. But the amount of equity that I have is like 6 point something because I've never refinanced. So once I refinance, then or once I sell, that's even better.
Yeah.
Like, I mean, the beautiful thing about refinancing, and I agree with you, it's probably like the best way to go because you don't have to pay taxes on
capital gains.
Yeah, you don't have to pay capital gains tax on any debt.
Yep.
So, and that debt being a refinance. So if I refinanced on this place, let's say I refinanced it at 435, then I'd get 80% of that, which would be pretty good. And I pay no taxes on that income. So I could buy a property on that debt that I just took out.
Yep.
But again, I do owe that debt.
Yes, of course.
Yeah. So, but if I sold the property, that amount that I made in profit, I now have to pay 50% in taxes.
Right. It's a give and take.
It very much is.
Yeah.
So it really is pick your poison, choose your poison. But I mean, like for me, I've never refinanced, something obviously that I've thought about quite a bit because who wouldn't?
I mean, walking through this place that we're in right now, and what I was in here before you even got the key. And I remember I mentioned this old rod skylight, and you laughing like, "Oh my God, yeah, that was there." Yeah, I remember the condition this place was in before you took possession, and you purchased this for under $200,000.
Yeah,
and now you're looking at potential refinance after all the work you've done, as up to 435, which is just an incredible return for a potential refinance.
Yeah.
Now, we talk about refinancing, but I think one thing we have to bring up if you're going to refinance and if you're going to get into BRRRR, as you said yourself, a construction background, which has been such a key asset to you. I know you started Maze Construction in Moncton and you were operating that. I know you recently sold it, correct?
Yes, that's right. Yeah.
Yeah, but your background in construction, understanding the contacts and the contractors to bring in to help you get the renovations done to a certain level to get that refinance as high as it is as a option for you to do in the future, with the construction background has been fundamental in even getting there. So what was your background in construction and how did you get there?
There was very little background in construction. The only thing that I really did have was I worked as a laborer for a construction company here in Halifax for, I don't know, 5-6 months, something like that, right? That was right after university when I was like begging for money. And it worked out. It was a fantastic learning experience for me because I got to learn like, oh, there's no real, like, it's not rocket science. Like a lot of us think that, oh, it needs to be one particular way, right? Like code is only one way, but code is a book full of ways to do things. And so you can use certain different products. You can use a bunch, like that's why Kent is full of different products that do the same thing, is because there are certain different ways to do things.
Yep.
And I just learned one way, and some other guy will learn a bunch of other ways, and another guy with way more experience will learn all ways. And that's fantastic. That's great. But on me, I started learning from that experience of being a laborer, like, oh, it can be done this way, or it could be done that way. And it wasn't as intimidating anymore. And that was the first step, was the intimidation. Like when you go hunting, or when you like get on skates or something like that, like as soon as you take your first step, it stops becoming more as intimidating. Sure, you're not skating yet, but it's less intimidating, and you're closer to getting to be able to skate. And so that was the first thing for me, is I needed to learn that it wasn't as intimidating anymore. And then I moved on to creating a construction company after I had already done a flip, or like not a flip, but a renovation project, like a big one like this.
Yeah.
So essentially what happened is I bought this property, and I had an idea of how much money it would cost me to renovate it to what I wanted it to be. I did that through a number of contractors, because you hire and fire so many throughout the course of something, unfortunately, because
you don't know the contacts yet. You don't know. You're
Yeah,
still trying to figure out.
Yeah, you're hoping that they, like, the talk is real good, right? Like they're fantastic at talking, but then they won't show up on time, or they won't show up at all, or they'll be overcharging, or they just won't, do good work. And it's all just like finding the right people for the right jobs is very, very important. And so what happened with me is, that happened a number of times, and I just ended up finding the right crew, finding the right people over time.
Yeah.
And then built the company with a fair bit amount of confidence to be able to support other people moving forward.
Yeah. I love that you brought up the laboring job, because it just, for me, knowing you as long as I have, it just kind of cemented the timeline for me in like how far you've come. Because now, like, I remember when you got the laboring job. I remember because we saw the house on Brunswick, or the condo, I should say, like May 2017, and you had started with the laboring job, I think, around the corner for me in South End in July 2017. And then and you said you did that for 5-6 months. Then you got your next job in marketing, right? Yeah. And then in October 2018, you had bought your first property, and you just got on your next job for $60,000.
Right.
And now we're in October 2020.
Yeah.
And now you're up to 8 homes, 60 tenants.
60 tenants, yeah.
Yeah. And I bring that up because it's just, I remember when you graduated university.
I know. Wild. Yeah, I know, man. It's crazy. I think like that's a thing that I try to talk about as much as possible to friends, like people that I really care about, is that it is very possible, and it's not as intimidating as a lot of people would have it seem. And the reason why they're making it sound super intimidating is because they're making money off of it.
Yeah.
So like contractors, they'll make the whole thing seem like, oh wow, what a big job, or oh wow, that's a lot. That's going to be quite a bit of figuring it out and jigging and all these, and they'll moan and groan because
they'll upsell.
Well, because they're trying to make sure that, oh, okay, I have a plan. I know what I'm doing on this. I know, okay, this is a lot of work, but I'll take care of everything for you. Don't worry. Well, you could do it yourself, and it's really not that complicated. But a lot of people don't want to do it themselves, and they'll pay for the professionals to take care of it, assuming that they know what they're doing.
Yeah.
But unfortunately, a lot of the times, if you are hiring for a budget, they don't know what they're doing. And so hiring the right people for the right job is so important. And that's why you typically wouldn't choose the cheapest option. You'd choose like the second most expensive option.
Yeah.
Because that's, those are the people that will provide the free services once in a while, because they're making a good enough profit margin that they can say, oh, your subfloor was all wrecked, but we redid it within an hour and I won't charge you for it.
Incredible.
Right? Like stuff like that.
Yeah.
Right? And they can do that.
But I guess that leads me to my next question. You've said you've done a lot of hiring and firing. What were some red flags for you with contractors that you made you be like, this guy's not what I'm looking for? Because like if people are going to pursue the investment property route, they're going to need a good team, or they're going to have to learn how to hire a good team.
Mm-hmm.
So how did you find your team that made you comfortable enough to pursue more properties? Like what were some things you had to go through?
Still something that I'm working on, honestly, but I have a great crew in Halifax.
Okay.
I have 2 crews in Halifax, right? Like you saw them outside.
Yeah.
And they're working right now and they're fantastic. And I refer to them to everyone because they really are that good. And I put my own money into them.
Yep.
So, why wouldn't I refer it?
Yeah, of course.
And I've tested and tried them, and I've tested and tried a lot of people, right? Like brand names that, we would all kind of know, and it just hasn't worked out. The thing that kind of stops me from, or, makes a decision for me on whether or not they're the right people or they're the right contractors for the job is if they show up on time, they communicate well. That's really all it is for me. If they don't show up on time and they never communicated with you that they were going to be late, that's the first huge red flag that's not going to be the first time that ever happens.
Yeah.
Or that's not going to be the last time, sorry, that ever happens. That's going to like continuously happen. And so you put them in place the first time, give them a second chance. On the second time, fool me once, shame on you. Fool me twice, shame on me. That's when you let them go.
Okay.
Yeah.
I mean, not a lot of people, and it's great you say that because not a lot of people, a lot of people are too forgiving, I find, and they'll say, "Oh, it's okay."
East Coast happiness, East Coast
mentality.
Mentality. Yep. It's like we all make mistakes, and it's true. Like I don't think that you should just like fire someone just because you don't like them. Like they might be hard headed once in a while, but like they're still good people.
Yep.
And they do fantastic work. I've worked with a couple of those people. And sure, I don't get along with them like I would get along with like a best friend, but they are not my best friend. Like they're a worker and they're doing their job and they're doing it right and they're doing a fantastic job. So like you reward people like that and you try to work with them to be able to make sure that like everyone's getting out of what the scenario is for the best of themselves.
Yeah.
The place that you don't want is like someone that just sells the talk or like talks a talk, but doesn't actually provide
the value.
The value is supposed to be, right? So we've had a lot of those kind of contractors and it's been very difficult to let those guys go because they're fantastic people or like talking, but it's just the value that you're trying to get out of the place isn't so much the talk. It's much more than that. It's really like, can we rent this out by the end of the month? Is it going to be ready? If it's not, the talk doesn't do anything for me.
You're out of money.
Yeah. You could be doing that too. That would be awful. Yeah.
I mean, like if you have a cash flow in mind, if you have a plan to make money out of this property, the longer you have people in there working, that's money you're paying out because you're paying them an hourly wage, I assume, or however you negotiate that arrangement. And if you're supposed to be having tenants in by the 1st of May, but it's really now the 1st of June, you're paying out the expenses for the month, the mortgage, whatever else other expense you possibly can't think of because there's always something you don't think of.
Yeah. So in a flip or a burr, there's like holding costs, right?
Yeah.
They call it holding costs. So it's the stuff that you pay for when you're not
renting or selling.
When
Yeah.
you're not making any money.
Yeah.
You're just holding on to it to make money later.
Yeah.
So those holding costs will really get you if you're not careful.
Yeah. And that's why like when you say knowing your numbers and protecting your cash flow is priority number 1 through 10.
Yeah. I mean, that's my priority. That's how I do things is because I do buy and holds, but
yeah.
It's not the only way. Like there's a lot of people making way more money than me doing other ways. And it's just not something that I deal with. Like there's several different investment companies around here. There's Olympus Properties.
Yeah.
There's Killam. There's AMK. Those three companies that I just listed here in Halifax all do different things. Olympus does buy and hold. So they will buy a property and hold it for as long as they can, right? And they're making good money and their rents are real cheap because they own the building outright, or when they refinance, it doesn't really matter. They're still making money because they just got out all of this money out of the property because they've had it for 30 years. Now you have AMK. They do flips like Burr. They do a lot of Burr. So they're going through a lot of inventory every year. Then you have Killam, and Killam does a lot of buy and holds, but their whole thing is like they're on the high end of rental income, because they have the REIT. So they have investors pumping them money and they need to buy anything. So they just need to get their money away and offer those returns to investors, like the doctors and all those kind of people that are giving them money every year to provide them better returns than the stock market could.
Yep.
So that's what, Killam's doing, is they're buying a bunch of properties and holding on to them because they need to continuously have a larger portfolio every year based on the investors. And the one that I kind of associate with the most is Olympus. Seymour's a fantastic person and he's a fantastic entrepreneur, and he's just like a family man, which is something that I thrive for. And I just have a lot of respect for that kind of way of doing things. Is it doesn't have to be full tilt.
Yeah.
It can be very much all right, why are we doing this? Why do I need this amount of money or whatever? And then let's, get there in stages. Let's do this healthily, and, it takes time, those kind of things. For me, that just makes the most sense for me. But there's a lot of investors doing different things.
And you said it right in the head, in the sense of there are some people doing different methods that have all proven successful.
Very.
Everyone has their own strategy that works for them. You touched on something that I'm always a big fan of, is it's knowing your why and understanding why you're doing something, and understanding that it's okay if things don't happen overnight. I know to a lot of people, if they listen to this, that they're going to hear you say your trajectory from 2017 to 2020, they're going to say, holy crap. And the truth is that I remember, and I'm bringing this up because I watched you go through it. I remember how stressed you were.
Man. Yeah. Yeah, man. No, it's a real thing. Let me talk on this a little bit more, because this is something that I'm glad you brought it up. So one of my business partners on one of my larger properties recently reached out to me, and he was like, hey man, I just really appreciate kind of where you've come. And I was curious, what he meant by that. What do you mean where I've come? Financially or mentally, what's going on? He's like, no, when you own the construction company, or when you were growing so fast, you were so on edge. You were very much like a lion in a tiny cage, and it just wasn't that healthy. It just hurt our relationship, and it really did suck. And it's so true, man. It's so freaking true. And it's not just friendly relationships that it would touch, but it would touch every relationship that I had with everything. Even life was just harder. You know, it was just it sucked. But that's the price. That nothing comes easy, and I just wasn't the best at managing it. So I'm still trying to figure out how to do it properly. But because I got into this so early, at 26, I just didn't have the right tools in my tool belt to be able to
cope,
to do it all right. And I took people, I hurt people along the way, and I didn't hurt them or ruin friendships or anything in any way, but it's just it had an effect for sure. He was happy that I had sold the construction company, because when I was doing the construction company, not only was I managing the projects that were going on, but I was also the HR manager, the marketing manager, making sure that there were new projects coming up, making sure that everyone was getting paid, making sure that the clients were very happy. And I was doing that all from my house. So I wasn't even there.
Yeah.
And it was just too much. It was just way too much. And the construction company grew real fast, which, of course is a blessing, but also a curse. And I didn't expect that we were going to be working on 3 projects at a time, at the same time.
Yeah.
I thought, okay, well, when we're not busy, we'll just work on my properties. And when we are busy, that's great. But then busy became really busy. And then I just was flat out. And it also, I was able to still buy properties, but it was just another added stress.
Yeah. You took on more than you could chew.
Mm-hmm. Yeah, very much so. So I'm very grateful for how far I've come in this game, but it did come with costs, and nothing worth of value is free, right? So I had to do that to get here, and I'm going to have to continue doing something to get to the next stages and all those kind of things. But at 26, like I really just didn't have the right tools in my tool belt to be able to provide the right insight and mentality that it needed to be the right leader. And so I think that I need to, and the right friend. And I need to work on that in myself, but then I also need to realize like who I am as an entrepreneur as well. Am I someone that builds businesses, or am I someone that and like holds on to them and does all that kind of stuff, similar to my real estate? Like, or am I just someone that flips? Like, do I build a successful business and then sell it to someone or something like that, right? So obviously that's a little bit of a different business model than a lot of other entrepreneurs, and it just has worked out for me for this particular scenario. Maybe my next business is something that I hold on to for 40 years. I don't know.
Yeah.
But real estate for me really is my main focus again, and I'm so happy about it. Like, I love working on building a stronger portfolio, and then I really do care about like what should I do with my time now that I'm essentially retired. Like, like it just I can play video games as much or as little as I want, and so yeah, it really is more so just like, what do I do with my time now that I'm 26 and I can kind of do anything?
Yeah. You have the world at your feet.
So that's really like the next challenge that I'm focusing on, especially during a freaking
pandemic.
Like, what the hell? Yeah, I can't just like travel as much as I want, or whatever.
Just having a hard way to spend your time and your money.
Yeah, for real. So I mean, like, I've joined jiu-jitsu and stuff like that now. Like, I'm gonna go tonight, and there's like little things, like little hobbies that I've added. Playing video games with the boys instead of just playing video games. Like, I've
made it social.
I've bought the right console so that originally I had a PS3, and this is just like for fun, right? Like, I'm just playing video games once in a while, but now I bought an Xbox that I could play with my boys that have Xboxes, and it really has become more so like, what can I do in my life? A great quote from Jim Carrey was, it's not so much like what you've done in your life, but what impact you've had on others that really matters.
Yeah.
And so if people can say like, oh, he's a fantastic individual, or like, I really love him, or he's great to me, or whatever, that has so much more value than just like, yeah, he's rich. And so that's something that really has
become a focus.
Yeah, a lot. Like, of course, I'm not there yet, but I'm working on it.
You're figuring it out.
Trying.
I think that's all we can do is try and grow day by day and figure out where we're going, and just try and be what we want to be and pursue the things we want to pursue. And that's why I wanted to have you on to talk about investment properties, because I know personally how much they've actually positively impacted your life, and I've seen the growth, and I knew who you were back then.
Yeah.
A little anal nutbag.
Yeah. Big time.
To see you now be like so calm and composed and be willing to share your story, because there are a lot of people that will hopefully take a lot of value from this conversation. Maybe they'll reach out, maybe they'll be inspired to pursue their own investment dreams, and hopefully real estate can be that for a lot of people, like it has been for you. Tyler, man, thank you so much for coming on.
Thank you for having me.
It's been an absolute pleasure. I'm gonna get you back soon because we got a lot more to talk about.
I'd love that. That'd be sweet.
We'll get you on soon, man. Thank you so much.
Get some questions from your crowd, from your listeners.
All right, next time we have you on, week before, we'll do a little thing on the Instagram account, and we'll ask for questions and see what people want to ask you.
I'll do it on mine too. I'll figure out
we'll get it
what
going,
people
man.
are interested in.
I really appreciate you, man.
Cool,
Thank
man.
you for your friendship.
Bump elbows here in a second.
Yeah, no, we're gonna hug.
Okay, cool.
We're in Nova Scotia.
Welcome to the Atlantic Coast. Yeah.
All right, man. Thank you. Thank you so much for tuning into the show. If you want to get in touch with Tyler, you can reach him at 902-209-8873 or at tyler@tylersellars.com. And if you'd like to get in touch with me, you can reach me at 902-220-7357 or jason.paul@kw.com. Thanks again. Bye.